Hello traders, Gary Wagner here, just about 10:10 in Honolulu, 4:10 in New York. It is Wednesday, October 19th, 2016, and this is the Daily Report for gold and silver. We do have the precious metals complex trading higher this morning, modestly higher, with gold trading up about $7.5. This is COMEX, of course, at $12.70.40. The low on the day is $12.61.10, and the high $12.74.40. When we switch over to spots at $69.25, up about $7.20. Lows and highs roughly the same, $73.35 on the high, $12.60.50 on the low. Net change on the day, about a 0.5% gain in gold. Over to silver. Silver also trading higher on the day, up about a 0.5%, about an 8-9 cent gain, $17.67. That is our current print, with a low of 57 and a high of 77 on the day. And then lastly, when we look at COMEX futures, they're trading at 1768, up about 0.25% on the day. Let's take a look at our first chart. So traders, of course, we are still long our gold contract. We're long roughly at $12.59, market now at $12.70. So we now have a little bit of breathing room, not quite ready to move up our stops. However, I am monitoring it very closely. If I see some weakness in there, I will send out an immediate trade alert to go ahead and push that stop up. But what I am impressed about on today's activity is, and we've been using this chart really to look at these effective lows. So now we have had a higher low for the last 2 weeks, and now with today's move, we've gotten this higher high this week, and that's, to me, a pretty solid signal. Even more solid is the fact that we are now trading above what I consider to be a minor resistance area at about 1266. That is the 61% retracement, and it is a short-term retracement, of course, from this rally here at 1200 all the way up to these tops at 1376, 61, of course, and then 78, which is where the market actually fell to. This is, traders, a much deeper than typical retracement on a market unless we take a look at the big picture. Let's go ahead and do that now. And so traders, I've just adjusted one of our fib retracements to encompass the entire move that we have seen beginning of last year, the start of this year, 2016, market trades at 1050, 1040, up to the same top. And when we do that, this dotted blue line is our 38% retracement. And so that's why, if you recall, I had put a critical zone or area in this area of a fib harmonics between 1248 on the high and 1238 on the low. And that's what would create this kind of buffer zone that I felt was, on a technical basis at least, critical that we did not break below. Now, this is a weekly chart. On this weekly chart, we've definitely moved past our 61% retracement. And here's what's interesting. At this point, 50 is a minor level, 38 is a major level. That 38% retracement comes in at roughly, I believe, at about either 1308 or 1318. I believe it's 1308. These numbers are fairly close together. We also have a couple of series of tops that come in at around 1300. Let's go ahead and kind of highlight those. And that would be this area here, this top here. Another real minor level would be this former top here, which I'm not that concerned with. I don't believe that that's really going to play any kind of importance. That comes in probably at around 1290. So if in fact this market continues to move higher, which I believe it will, I don't really see on a technical basis any real major resistance between our current print, which is about 1270, and about 1290 to 1300. So we should be able to extract a little bit more out of this trade. As I said when I put this trade on originally, I didn't feel it was a tremendously high-risk trade because we knew that if the market traded and broke below this particular price point, that we were incorrect and this market was headed lower. So we're able to get in at 59, really, putting our stop about, $20? I think we put it just below 41 to account for this low right in here. But we were risking about, as I said, about $20 on the trade, and my sense is that we should have the opportunity to reap about a 3-to-1 risk reward on this trade. Maintain your current level of stop placement, maintain your current long position. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow on Thursday for another gold forecast. Bye-bye.